And I'm here. Happy Wednesday, everyone. Happy Winning Wednesday. I am your girl, Dominique, Atlanta's nurturing agent, and thank you for joining me on another episode of Winning Wednesday Tips. Today, I'm going to talk about all things VA loans. If this is your first time here, welcome, welcome, welcome. Please come back again and see us. If this is a returning time, thank you for coming back and joining me today. I want to go into VA loans because the 4th of July is coming up, and then in addition to that, it's just VA loans have a very special place in my heart. My very first deal was a VA loan, and then in addition to that, I have family members and friends who have served. I have family members and friends who are still serving. So VA loans are very special to me. And if you are someone who is a veteran or someone who is actively serving, thank you so much for your sacrifice. Thank you for your service, and thank you for your time dedicated to this country. Thank you. VA loans are fun because they are backed by the government, which means that FHA loans, conventional loans, VA loans, all these loans have to be insured, right? And they're insured by different entities. Conventional, we talked about, was insured by investors, FHA by the Department of Housing Authority and by the government, and VA loans are backed by the Department of Veteran Affairs within the government. So they are backed and insured by the government, and they are pretty favorable if you are going to take advantage of them for a few reasons. One, no down payment requirement. You have no down payment requirement. Other loans have 3%, 3.5, and then if you pay anything less than 20 for any other loan, you're automatically paying private mortgage insurance. But with this specific product, it's zero down, so no down payment, and no private mortgage insurance. Like, that's great. No private mortgage insurance and no percentage down, no down payment. That's great. Obviously, with any loan, the more you have down, the less your mortgage will be in the long run, right? But this loan in particular doesn't require a down payment, so you are able to finance this loan 100% if you want to. Secondly, let's talk about the credit score required for this loan, right? For this loan in particular, it is very favorable if you're in the 640s or above. Anything less than, they may work with you because of just because of your status, and a lender may work with you, but I'm going to just say, for the sake of this video, have a 640 or above if you're considering using a VA loan. Also, let's talk about who is eligible for them, right? Because just because you signed your contract to join the military yesterday, you can't just take out a VA loan tomorrow. It doesn't work that way. So let's talk about who's eligible. If you have been in the service for 90 consecutive days during a wartime, as a military personnel, then you are eligible. If you enlisted and you served 181 days during peacetime, then you're eligible. Or if you're in the National Guard or any of the guards, if you're a guardsman, then you're able to apply for a VA loan after 6 years of consecutive service. So 90 days during wartime, 181 days if it's a peacetime, and then 6 years if you're in the Guard. So those are the requirements in relation to time for VA loans. Also, I want to go into 2 fees that you can expect to pay if you use a VA loan that you need to remember and be mindful of. The first one is your funding fee. What is a funding fee? A funding fee is a one-time fee that you pay at closing, and it typically comes in a percentage, and the percentage ranges from about 0 to 3.3%, and that percentage can be added onto your loan if you want to add it to your loan, but loan, I'm like hitting puberty over here. If you want to add it to your loan, it can be added, but it's a one-time fee. And again, if you want a lower mortgage payment, it's best to just pay out of pocket at closing if you can, versus having it added. But you can add it, which is a good option too. Just expect to pay more long-term if you add it to your loan. So your funding fee is there, and that is essentially to reduce the amount of taxes that taxpayers have to pay on that loan. So that's why that funding fee is there. The other one is your appraiser fee. So appraisals are done to ensure that the house is being sold at value, right? That's why appraisals are done. And typically the lender will send the appraiser out there. The lender is whom hires an appraiser to go out there and to determine that the value that the home is being sold for is just. It's to protect the lender, and it's also to protect the buyer that is buying the property. Now, the appraisal is also paid for by the buyer. The buyer has to pay for that, and that typically ranges from about $400 to $600. And it's paid up front right then and there. You can't pay it at closing. You can't add it to your loan. You have to pay it before they go out and appraise the property. Now, the big point to keep in mind when it comes to an appraiser is for VA loans, it's a VA appraiser in specific. So they're going out not only to make sure that the value of the home is just, but to make sure that the home is also structurally sound. And that is what their primary focus is as a VA appraiser. And so the VA appraisals are a little more strict than a traditional appraisal, but that is something to keep in mind, and you do have to pay for that. So funding fee and your appraisal are two things that you need to be cognizant of in terms of budgeting for a VA loan if you're going to go forth with that. And then let's see, we talked about VA loans, time frame. We talked about credit score. You can use a VA loan more than once. I think that is so cool, right? You can use it more than one time. So let's say you are a veteran, you buy a home, you sell it, and then you decide you want to buy another home after you sell it. You can still use it after you sold your home. So that is another plus of a VA loan, is that you can use it more than once. And then let's see, what else? Get your credit score. Who can use it? Other than that, like any other loan, you have to have your work experience, your pay stubs. If you are self-employed, you have to have 2 years of your tax returns. If you're not, 2 years of W-2s. We talked about your credit score already. Certificate of eligibility, they want to determine that you are eligible for the loan by reviewing your military history, things of that nature. They'll go through that and they'll give you a letter to determine if you are eligible. It's called your certificate of eligibility. It's a COE is what it's called. So you'll get that as well once you apply. But in a nutshell, that's everything about VA loans. Who they're backed by, who's eligible, the credit score for them, and then the two major fees you have to be mindful of if you're going to use them. And then lastly, just remembering that VA loans, because they are backed by the government, and not just because they're backed by the government, but because they are a bit more favorable in terms for the borrower, they can take a little longer to process versus your FHA or your conventional loans. It might take a little longer, which is, depending on your situation, maybe not a big deal, but be mindful of these things. And I hope that this information was helpful. Happy Winning Wednesday again, friends. And I hope you have a great holiday weekend as well. Take care.